an adjusting entry was made on year-end December 31st to accrue salary expense of $2,700, which the following entries would be prepared to record the $6,000 payment of salaries in January of the following year. I only have one entry here. I'm going to just show you how this works. First of all, let's put down what we know. Here's our accounting equation. And on December 31st, we made an entry to accrue salaries for $2,700. And when you accrue salaries, that means you show that you owe them, but you're not going to pay them in this accounting period. So here's what happens. You have two accounts, salary payable and salaries expense. And you debit salary expense for $2,700, and you credit salaries payable for $2,700. That was the adjusting entry made at the end of the year for this salary accrual. Now, what they really want to know here is this. When you come back in on the brand new year and you're going to make your first actual cash salary payment, how does that cash salary payment get divided up if you made this adjusting entry at the end of the year? So here it is, end of the year you make this entry, and then the very next entry you make for salaries is going to be for $6,000. What do? Well, here's how you handle that $6,000. First of all, in the brand new year, you will credit cash for $6,000. Then you will also reduce the liability you had set up here as of the end of the year for $2,700. And then what's left between of that $6,000, what's left is the current salary expense, which in this case would be $3,300. So if you made an accrual for salaries at the end of last year and your first payment for salaries of the new year is $6,000, then you get rid of the liability that you'd set up at the end of the year for $2,700, and the difference will all be current salary expense for this new current year.